Okay, let's unpack this. Picture a company on the cusp of something huge.
Yeah, like Airbnb back in 2011.
Exactly. They're gaining serious traction, just hit 1 million bookings. Feels like they're on top of the world, right?
You'd think so. But then this threat just emerges.
Out of nowhere, almost. The Sandler brothers, launching Wimdu, they were notorious for that, weren't they? Cloning businesses.
Oh, absolutely. So suddenly Airbnb, still pretty young, is facing this really well-funded competitor.
So Brian Chesky, the co-founder, he starts calling people heavy hitters.
Right. Andrew Mason from Groupon, Mark Zuckerberg, Paul Graham, trying to figure out, well, what do we do now?
It's fascinating, that decision point. Do you try and buy them out?
Right. Groupon did sometimes, yeah. Or do you just go all in and fight?
And Zuck's advice was pretty straightforward, wasn't it? Best product wins.
Yeah, but Paul Graham had a different take. Saw Wimdu as just opportunistic, while Airbnb had, a deeper mission.
Right. And ultimately, Chesky, drawing on advice from folks like Reid Hoffman, who co-authored the book we're looking at today, decided to fight.
But with a very specific high-stakes kind of strategy.
Exactly. And that strategy, the core of our deep dive today, is blitzscaling.
Blitzscaling. Oh.
Now, it isn't just about moving fast. It's about strategically sacrificing efficiency.
In certain areas, yeah.
To grab that market before anyone else can, especially in those winner-take-all situations.
Understanding you can fix the inefficiencies later.
Yeah.
That's the key gamble.
And the book we're exploring, Blitzscaling, the lightning-fast path to building massively valuable companies, by Reid Hoffman and Chris Wanna, calls it the secret weapon for building scale-ups.
Scale-ups, not just startups.
Think about Airbnb's crazy fast international expansion, or WeChat in China, or Slack's adoption speed.
It's just explosive growth. And it's significant that someone like Bill Gates wrote the foreword.
Yeah, he emphasizes how relevant these ideas still are, even today. Maybe especially today.
In this dynamic landscape, absolutely.
So our mission here is to really get under the hood of blitzscaling. What are the core principles?
When does it actually make sense to hit the accelerator that hard?
And what are the risks? Because there are definitely risks. And of course, the potential rewards.
Okay, so where do we start? The book talks about the conditions that made this possible.
Right. The blitzscaling era basically kicked off with Netscape's IPO in '95 and the internet really taking hold.
That just changed everything. The speed, the global reach.
Geographical barriers started to melt away,
And a massive part of that is network effects.
Ah, yes, the classic example. Like, the more people have phones,
the more valuable your phone becomes. Simple, but powerful.
And Airbnb is a perfect example. More hosts attract more guests.
Which attracts more hosts. WeChat, eBay, same thing. It's this positive feedback loop.
Which creates a huge advantage for whoever gets big first. The first scaler advantage.
Exactly. But here's where it gets interesting, like you said. Blitzscaling isn't just random, get big fast.
No, it's deliberate. It's actually kind of counterintuitive.
You're consciously choosing speed, accepting the messiness, the risk.
Because the risk of a competitor blitzscaling before you might be even bigger.
It's a calculated risk. And yeah, this kind of disruption is tough for established players.
For sure. Winners and losers.
But the book cites William Nordhaus, the economist, suggesting that long-term, the benefits of this tech progress, the productivity gains,
mostly flow to consumers. Society benefits overall.
That's the argument. Increased productivity helps everyone in the end.
Now, you might think, okay, blitzscaling, that's a Silicon Valley thing.
Right. But the book really pushes back on that.
They give examples like Rocket Mortgage in Detroit.
Priceline in Connecticut. WeChat from China, obviously.
Spotify, which is totally international.
So the principles aren't geographically locked. That's a key takeaway.
And it goes further, right? It's not just tech startups.
No, they argue it applies within big companies too, entrepreneurship.
And in different industries, like fast fashion.
Yeah, Zara Speed is an example. Even something like oil shale, though that's capital intensive.
Wow. And even outside business. Presidential campaigns?
The Obama '08 campaign is a key example, using connectivity, tech.
Nonprofits too.
Yeah, applying the principles for impact. It's broad.
The name itself, blitzscaling, tells you a lot.
Comes from blitzkrieg, lightning war. That sense of a sudden, overwhelming effort.
So, just to nail the definition, it's prioritizing speed over efficiency deliberately when facing uncertainty.
That's the heart of it. Speed over efficiency under uncertainty.
Okay, so how do you actually do it? The book lays out 3 key techniques.
First one, and maybe the most crucial, business model innovation.
Right. Not just the tech, not just the product, but how you actually make money and grow exponentially. It gets overlooked sometimes.
Totally. You can have amazing tech, but without the right model.
You're stuck. The book contrasts tech innovation, like the smartphone enabling Uber,
With business model innovation, like Google's ad model or Amazon's marketplace, different beasts.
and PayPal's early days are a wild example here.
Oh, yeah. Exponential growth, but they were losing money on transactions.
But the referral bonuses,
Yeah.
paying people to sign up friends.
That was the genius business model innovation. Way cheaper customer acquisition than ads back then.
And that ties right into the VC mindset, doesn't it?
Absolutely. They often back that exponential growth curve, even with higher risk.
Especially in those winner-take-most markets.
Yeah.
Slow and steady just loses.
Right. But that hypergrowth brings huge HR headaches. Doubling, tripling staff in a year.
Needs a totally different management approach. Adaptable.
And history shows these new models, Amazon, eBay, Google, they just ran circles around established players stuck in old models.
Like Netscape basically giving away search.
Yeah, huge miss. Opened the door for Yahoo, then Google, to build empires on search ads.
So the real magic is that combination. Innovative tech, great product service, and a scalable business model.
And those models can seem weird at first. Google's text ads, Alibaba's online mall, Facebook's newsfeed. Counterintuitive.
Aaron Levy's analogy is great here, trying to size a disruptive market by looking at the old one.
It's like estimating the car market in 1910 by counting horses. You gotta think bigger.
Okay, so thinking bigger. The book talks about specific growth factors that fuel this.
Right, the essential ingredients. First, market size.
The opportunity has to be massive to justify the blitzscaling costs and risks.
Amazon aiming for the everything store from the start. Don't underestimate the potential.
Make sense?
Second factor.
Distribution. You need a scalable way to reach tons of users. Drew Houston from Dropbox said distribution is as important as product, right?
Exactly. Can't be an afterthought.
Then virality. Getting users to spread the word for you.
Often goes hand in hand with free or freemium models, like Dropbox giving free storage.
Facebook nailed this too, combining organic sharing with leveraging existing networks, like colleges.
Fourth growth factor. High gross margins.
Right, more profit per sale means more cash to reinvest in growth.
Software usually has an edge here over, say, low-margin traditional businesses.
Although Amazon uses AWS, its cloud business, for those high margins to fuel the retail side.
That's a key point. AWS profits fund a lot of Amazon's other bets.
And we can't forget network effects again. We keep coming back to them.
Because they're so powerful. Strong network effects build those defensible moats.
The book distinguishes direct effects, like LinkedIn, more users, more value for everyone.
And indirect effects, like Windows and Office reinforcing each other. Microsoft mastered that.
But network effects have that tricky start, right? The cold start problem.
Yeah, why join if no one's there? You need aggressive growth to kickstart it.
Jeffrey Moore's crossing the chasm stuff. The bowling pin strategy.
Exactly. Target a niche, build momentum, then expand. Sway expectations about future adoption.
And strong network effects give you power later, like using M&A to jump to the next growth curve.
But like Facebook buying Instagram and WhatsApp, big market cap helps there.
Okay, but it's not all smooth sailing. There are growth limiters.
Things that can hold you back, yeah. First is product market fit.
Ideally, you have it before you scale hard.
Ideally. But sometimes blitzscaling means scaling while you're still finding perfect fit, learning and iterating super fast.
Risky, but maybe necessary.
The other big limiter is operational scalability. Can your systems, your people, actually handle the flood?
Infrastructure and organization. The book mentions early Friendster and Twitter hitting walls here.
Their tech couldn't keep up. AWS basically solved this for a lot of companies later, like Dropbox.
Amazon built that internal power of modularity, which became AWS. Huge advantage.
Definitely. Okay, so we've got the factors and limiters. The book also outlines proven patterns for that business model innovation.
Like a strategic toolkit. First, bits rather than atoms.
Software's advantages, global reach, easier virality, network effects, often better margins. Google, Facebook.
Makes sense. Then the platform model.
Building something others build on top of. iTunes, Amazon Marketplace, iOS creates sticky ecosystems.
Often with high margin taxes on transactions within the platform.
Right. Free or freemium is another pattern.
Great for grabbing users fast, kickstarting those network effects. LinkedIn Basic, Facebook's ad model.
Then subscription models. Think Salesforce, Netflix.
Often gives a bigger market size and better distribution, than, say, old package software.
And underlying a lot of this is Moore's Law,
Just the relentless march of computing power getting cheaper and faster.
which drives new tech and new business models. Netflix switching to streaming is a prime example.
They anticipated where the tech was going, how cheap storage and bandwidth would get.
Exactly. It wasn't just about faster chips. It changed the economics completely. Enabled cloud, streaming,
Okay, that covers business model innovation. Technique number 2.
automation. Blitzscaling companies lean heavily on automation for speed, cost savings, reliability.
Driven again by Moore's Law, making it feasible.
Yep. And the third key technique, which is also a growth factor, is distribution.
It's so critical it gets its own spot as a technique.
LinkedIn's early story is a great case study here. Struggled for funding initially,
Then use growth hacking to hit that first million users.
but the real breakthrough, the thing that let them truly blitzscale, was finding that revenue-generating distribution channel.
The recruiters paying to access profiles.
Exactly. That enterprise subscription gave them the fuel.
And they layered on those network effects direct. Two-sided becoming the standard for professional identity. Huge moat.
Huge. The book also contrasts Amazon's retail versus marketplace models.
Different margins, different capital needs.
And even Amazon uses AWS for its own network effects in the cloud space. Indirect compatibility standards.
But it also shows even giants like Amazon can fail outside their core despite distribution.
True. Success isn't guaranteed just because you're big.
Google's operational scale is another example mentioned.
Massive infrastructure investment, data-driven people management, key enablers.
And Facebook leveraging all those network effects, direct, local, indirect, plus finding product market fit with advertisers via the newsfeed.
Which brings up an important point. You don't always need the revenue model fully baked to start blitzscaling.
Slack is the example, right? Raise tons of money before showing big sales.
Exactly. Based on explosive user growth and the freemium promise, investors bet on the potential.
Okay, so that's the what and how. Let's talk when. When do you actually hit the blitzscale button?
And, crucially, when do you ease off?
What are the signs to start?
The book says, find a big new opportunity. Large market, high margin potential, no dominant player yet.
Tech innovation often creates these openings, like YouTube and video streaming.
Yep. Second, you need a real shot at that first scalar advantage.
Amazon succeeding in CDs but struggling against eBay's auction network effects.
That's the contrast. Third, a clear path to a defensible position.
Like Google's risky AOL deal to lock in distribution during the dot-com bust.
Calculated gamble that paid off hugely. And finally, you need access to capital and talent.
Got to fuel the fire. ClassPass hiring rapidly through networks.
So those are the start signals. What about stopping? The leading indicators.
This seems just as important, maybe more so, to avoid crashing.
For sure. Look for declining growth rate compared to the market or competitors.
Okay, worsening unit economics.
Yeah, costing more to acquire or serve each customer, decreasing productivity per employee.
And just ballooning management overhead, things getting sluggish.
Groupon and Twitter are the cautionary tales here.
Groupon kept pushing for growth even when the model wasn't sustainable long term.
Right. And Twitter kept hiring fast even as user growth stalled. Dangers of not stopping in time.
So blitzscaling isn't a one-time switch you flick on and leave.
No, it's iterative. You go through stages, constantly figuring out what scales and what doesn't, managing the things that break.
But the core business model needs some inherent scalability to begin with.
Absolutely. Can't blitzscale something fundamentally unscalable.
How does the strategy itself change through those stages? Family, tribe, village, city, nation.
It evolves. Later stages might involve different speeds, maybe fast scaling here, blitzscaling a new product line there.
Like Apple and Google blitzscaling into smartphones against Nokia, even though they were already huge nation-stage companies.
Exactly. Applying the principles to new battlegrounds.
And the founder's role must change dramatically, too.
Totally. From personally doing everything in the family stage,
To managing the doers in the tribe.
then architecting the whole organization in village and city.
And finally, maybe stepping back from the core blitzscale in nation to start new ones, like jobs returning to Apple.
Precisely. Focusing on the next big thing.
The book talks about management innovation, two key transitions companies go through. What are some big ones?
Well, you go from small teams to big departments. Individual contributors become managers.
Flat structures become more hierarchical, inevitably.
Communication shifts from everyone talking to everyone to more broadcast style.
And decisions move from gut feel and inspiration
To being more data-driven. You have to at scale.
also shifting from one core product to juggling multiple product lines.
And that pirate mentality, pure offense, shifts to a Navy approach. Offense and defense, protecting what you've built.
Like Uber having to mature its approach over time.
And the founder has to evolve personally. From founder to leader. Needs constant learning, mentorship.
Drew Houston's advice.
Yeah.
Your learning curve has to outpace the company's growth curve.
That's a tough ask, but critical.
Okay, now these 9 counterintuitive rules, these sound fun because they challenge standard advice. Give us a few highlights.
Yeah. Rule 1, embrace chaos. Forget perfect order. Speed demands accepting messiness.
Then hire good enough people, especially early on. Speed over perfection.
Connected to that, tolerate bad management short term. Again, prioritize scale initially.
Launch now, worry about perfect later. The MVP concept, get it out, learn, iterate.
LinkedIn's launch is an example, though you need to know what you're trying to learn and manage the risk.
Right, let fires burn. Strategic neglect, basically.
Focus on the fires that threaten the core mission. Let smaller ones smolder. Prioritization. SurveyMonkey's design choices illustrate this.
Do things that don't scale. This one's famous.
Yeah, the manual, unscalable stuff you have to do early on. Airbnb's founders taking photos themselves. Paul English at Kayak doing customer support.
Love that. Ignore customers. That sounds crazy.
Temporarily. When hyper-focused on scale. PayPal prioritizing user growth over perfect customer service initially.
Okay, context is key there. Raise too much money.
Counterintuitive, but it buys you optionality, buffers against the unexpected, acknowledges we're bad at planning.
And finally, after all that chaos, culture trumps everything.
Surprisingly, maybe. But even amidst the whirlwind, defining and reinforcing culture is vital. PayPal, LinkedIn examples again. Deliberate effort.
So we've seen tech examples. Can these ideas really work outside tech?
The book argues strongly, yes. Look at fast fashion, Zara. Speed, balancing automation with things that don't scale to match trends quickly.
Or energy, Chesapeake Energy's aggressive land grab, though that highlights the risks of sacrificing too much efficiency.
Definitely a cautionary aspect there. And M&A is a form of blitzscaling for big companies.
Priceline buying, Booking.com, Facebook's buys.
But established players often have disadvantages, incentives, risk aversion compared to startups.
And it extends beyond for-profit too. Nonprofits thinking about impact scale.
Political campaigns like Obama '08 using tech to scale reach and engagement. The perspective on competition can differ, though, like with the Gates Foundation collaborating.
What about different regions? Silicon Valley versus, say, China or Latin America?
Emerging ecosystems might lack the infrastructure or deep talent pool initially, makes it harder.
But building your own platforms there can be a huge long-term advantage.
Exactly. Mercado Libre in Latin America is the prime example. Learned from eBay, but built for their market.
And China is called the land of blitzscaling.
Yeah. Massive market, open to disruption, lots of capital, leads to incredibly fast growth like Xiaomi.
Different challenges, though. Maybe less deep exec experience compared to the Valley.
Potentially, yeah. Different leadership development paths, too, as Jerry Yang observed.
Okay, flip side. What if you're the one being blitzscaled against? What do you do?
3 options, basically. 1, beat them. If you think their model is flawed, compete directly.
2, join them. Launch your own blitzscaling effort, maybe acquire someone.
Or 3, avoid them. Redefine your market. Focus on a niche they're ignoring, like independent bookstores creating unique experiences.
Finally, the book stresses responsible blitzscaling. It's not growth at all costs.
No, absolutely not. It's about balancing that speed with thinking about the consequences.
Uber's early missteps are used as examples of ignoring responsibility.
Right. The book offers a framework for thinking responsibly, a spectrum for responding to issues, decisive action for systemic risks.
Like Airbnb's response when that property damage incident happened early on.
Exactly, taking ownership. And the idea of self-regulation comes up too, maybe heading off government intervention.
So wrapping up this deep dive, blitzscaling is clearly more than just a buzzword. It's a powerful, transformative strategy.
With potential to reshape lots of industries. Think AI, biotech, crypto.
And it leaves you with that big question. Is this blitzscaling era just getting started?
How will it play out in fields beyond tech? And crucially, how do we balance that intense drive for growth?
With responsibility. With ethics. That's the ongoing challenge.
Definitely something to keep thinking about.
Well, thanks for taking this journey into the world of blitzscaling with us. If you want to go deeper, The book Blitzscaling is definitely worth a read, and those examples we discussed really bring it to life.